We're live.
All right, party people, it's time. We all know how I like to do this kind of conversational Q&A type stuff. Thank you all for providing some questions in advance, because that's pretty much the agenda today, to talk about what you guys want to talk about. 'Cause that's what I want to talk about, what y'all want to talk about. So I guess before we get into the Q&A stuff, we'll talk. I'll just say some thoughts on the market, at least from our perspective. It's a hey Will, and again, David Brown's here, Pacific Mortgage, down everyone here. We're steady in the lending space. We continue to see rates kind of stall a little bit. I think there's still some anticipation of what's Jay Powell and Donald Trump going to do to, get this housing economy going again. Besides arguing and putting a lot of good media fodder out there. But at least they're talking about it, and I think the consensus is we're going to see better rates at some point.
We should. There's no reason not to.
We should. There was an article today about maybe a potential rate reduction could be coming soon by the feds. 2027. Just hang on, baby. Just hang on. But these things are all outside of our control. What can we control? Serving our clients well, making our phone calls, calling people back, being responsive, all those kinds of things. So let's just jump into some of the questions y'all had and anything else that's on your mind. Callie, you had a question about some agents talking about land, home combos. That's regarding like, hey, can I acquire land, maybe put a manufactured home on it, or
And
some kind
build.
of modular and build?
But the biggest question or the biggest response you have to have is like, how much is your budget though? Like, because right now, if you want to build that, it could be $800,000 for you to build a custom house of the way that you're envisioning
Right.
this. Like,
Right.
what kind of product do they have that could suffice, and what are you seeing an average price point for like a 2,000 square foot house?
And you kind
Yeah.
of summarize.
Yeah, so individuals who have not built before but are interested in building, whether it's ground up, acquiring the land, maybe they don't have land yet, maybe they want to acquire land plus build, what kind of costs there are. So I've done construction lending in the past. I see a lot of people end up going that direction, and 9 times out of 10 it ends up being something they wish they hadn't done. One, getting a good builder right now is tough, I think. Getting someone,
anything.
Well, even if you contract it out yourself. it's
Except a
hard
realtor?
to-
even if you try to
Find
contract,
me easily.
yeah, contract it. When you tell people too, they're going to have probably at least 20% in it from the beginning. That ends up being a conversation stopper for a lot of people, unfortunately. Fortunate for people like me who can maybe make them a loan up front, but that's just the reality of it. I mean, a lot of people who think about that, may not have the capital needed for it. I think also too, time and time again, we see significant cost overruns all the way through. Site prep, infrastructure, on through materials. Who knows what the market's going to do? Because these builders are going to protect themselves. If there's an increase in lumber, they're going to pass that on to the buyer.
And then at that point, when the loan amount that you have already approved and funded, if they reach that, then they still have to make that payment, and then they can't generally finish the construction.
They'll have to come up with their money on their own, or they'll have to apply for an increase in loan amount.
Okay.
No, we don't do construction lending, so.
But you do like manufactured home packages, right?
We do not do manufactured home packages.
At all?
If someone says we don't have anything to put down and we want a new Clayton home, then I would probably refer them straight to Clayton Homes. Now, if they have 20% down, we'll connect them with a bank, and they can do like a construction type deal where they're financing 80%, and then the bank will send that client back for the permanent financing.
Okay.
but it's just like any other construction loan.
Okay.
Now, if there's an existing manufactured home, and they need 100% financing, and the home is is no more than 20 years old, now USDA will finance that. So it was 06, we got an extra year there, now it's 20 years or newer with USDA. So, but it's gotta be in an eligible location, they can't make too much money, all those kinds of things.
What about USDA? Have you found this year that they're more strict on their repairs and stuff? Or appraisals?
So is USDA more strict on property condition with needed repairs? I don't know any more than normal, and Dustin had a question about that too with USDA. The USDA appraiser is going to be very similar to like an FHA appraiser. They're going to be looking for any safety, soundness, security issues, and if there are noted, then they're going to make it subject to the repair prior to closing, or prior to marking it as is. And this is, we'll have to see the repairs are made. Appraiser's going to go back out there for their nice $150 or $200 fee to verify that it's been done, and then hopefully it's been done to their satisfaction, and then we can hopefully close.
Okay.
So we're dealing with one right now on repair. Like it's not USDA, but it's re-inspection required. So
I had one that the funding was not there anymore. Like, we could still close probably, but the funding isn't there for the house. I was like, excuse
was
me?
that through USDA direct, through like Eastern Aid or something like that? Yeah,
I was like, what?
yeah.
What do you mean?
Yeah.
I spent money on this too.
Yeah, that money just evaporated. Yeah, we just do USDA guaranteed, so
Okay.
we don't do the direct stuff. On that note, USDA is, I think, more relevant now than it has been in a while. I mean, you have a softer market maybe. Sellers are more willing maybe to enter into a contract with that buyer, whereas before maybe they weren't.
That's true.
And for me, outside of the VA loan, that's probably my favorite loan for low, no down payment options, because the funding fee is low. It's 1% versus 1.75 on an FHA, 100% financing. The PMI is a lower factor per month than FHA. So FHA, you're paying 0.55% on monthly PMI. The USDA is 0.35%. So
Dang.
Would someone that qualifies FHA be able to like qualify for USDA if that's a better
sometimes.
scenario?
So the hang up we usually run into with USDA is usually around the ratios. So USDA, you have to have a housing ratio no more now. I think they raised it now to 33 or 34%. So your housing ratio, PITI, can't be more than, I think it's 33 or 34%. That's gross income or their housing payment up against their gross monthly qualifying income. The back end ratio can't be more, on a manual underwrite, can't be more than 45%. So, whereas FHA, 56% on the back, 43, 44% on the front. So a lot more leeway in terms of how much someone can borrow
Gotcha.
than USDA, more constrictive. That usually is the hang up. Usually, income limitations usually isn't a big issue. They keep raising those. So if you have a 1 to 4 family household now, it's pretty well over $100,000 a year you can make as a household,
Dang.
and be eligible
For USDA or FHA?
for USDA. So there's no income limit on FHA. You've got purchase price limits or loan amount limits, and those vary by county. Most of our counties, what's the FHA limit up to now? $499,
Oh, wow.
Dang.
I think right at $490, in the 490s, I believe.
I
on
could see
FHA.
that.
There's no loan limit on USDA, but you're constricted by those ratios a lot of times and how much they make. So, you can't buy an $800,000 USDA house because that payment would be, or the amount of income it would take to support that payment is probably not what we think.
Eligible, yeah.
Probably not, yeah. So, but USDA is a wonderful loan. We're doing a couple right now. That tends to be kind of the first, unless they're a veteran, especially the veteran with a service-connected disability, because then the funding fees waived. But USDA is usually where I start with people who are 100% need 100% or don't want to put much down, and then kind of go from there. And then THDA or Fannie and Freddie both have the 3% down, home ready, home possible, first time home buyer, and they're good. But people like that 0% down.
Is USDA just for like first time home buyers or like?
No.
Okay.
So the thing that makes USDA tough for a lot of people, you can't own any other real estate. So you may they may let you get by if you've like been willed a piece of property, or there's different situations where you can have an exception if you do have an ownership in a piece of property, but those are defined and they're very few and far between. So most of the time, if you own real estate already, you can't get a real estate loan. So
So if someone's been like renting for a while, they sold their house like a year ago, and now they're ready to buy again, they can use USDA.
yeah.
Well,
Yeah.
what if somebody was deeded land? Could they use USDA?
To build on or to just buy?
If they were deeded land and they want to, put like some kind of
Yeah,
a home on it,
they can, but they would have a hard time doing like you couldn't do a USDA construction loan, to my knowledge. Maybe they exist. Now there is a USDA renovation program. Did y'all know that?
Did not know that.
No.
There is.
USDA what?
USDA renovation.
Oh, okay.
So you can get a house that needs some TLC, finance 100% of that plus 100% of the improvements. And that's a loan that we would have to broker through another company, but those are out there. I had someone reach out to me the other day who had found me, or I was recommended on like a Facebook group or something like that. And they're like, yeah, I'd like to talk to you about a USDA renovation loan. So I start looking up online. I'm like, yeah, we can do it.
With that, do you have to like figure out like what would be the cost of the renovation, like to apply into the loan? Like,
But
early on?
It's gonna so the cost of renovation. So it's gonna be like any other renovation loan where you're gonna have a licensed contractor. You're gonna have a budget,
Gotcha.
all that stuff. The contractor's gonna have to be willing to do all that contractor paperwork. Deal with a HUD consultant potentially if it's over a certain amount. I think $35,000. So if you're willing to go through that and have proper expectations, I think it's all about where your expectations are.
Yeah.
Just be prepared for a lot of paperwork and a lot of, and it's really, I was talking to my guy the other day who does this, right? So with renovation loans, the process, how seamless it goes, and the experience for the client, it's all about the contractor. If you have a contractor who kind of understands how to, has documentation, can provide licenses, doesn't mind filling out paperwork, and understands how this works, then it'll be a very smooth process. If not,
like that.
if it's Billy Bob down the street with the pickup truck and, then, so. Anyway, so USDA, I mean, they're out there. I mean, you can, we've done a 2 or 3K this year, a conventional reno loan, and I would love to do a USDA, so if you know anyone, let's get
That'd
it.
be a good program to do in Irwin. There's a lot of homes over there.
Absolutely.
Yeah. A lot of stuff that just it might need repairs or it just need updates.
Yeah.
You know? Now there's rules around like what all kinds of things you can do, like
Yeah, what are those stipulations?
there's a whole list of them.
Okay.
I could send you guys
Yeah, that'd be great.
the guidelines, but the things like you can do let's see, you can do a garage but it has to be attached, or like things like that, like
Panels, electrical, plumbing, heat pump replacements.
yeah, all
things
that
like
stuff is usually fine. Yeah.
Okay.
Some of them would allow swimming pools, so some would.
I have an idea.
Yeah,
I've got a listing right now that actually that could probably use this loan.
Yeah.
Let's put some signs out there.
You got a listing? Yeah, I got some in my office. Yeah, I'd love to shoot me the address.
Cool.
I have one in the
Yeah.
I have one in the storage unit.
You have to do a video,
Yeah.
and saying, hey, this home would be perfect for USDA.
All right, now
Renovation.
you sound like Tim.
Dustin, you could hire Mallory to do it because Mallory is the queen.
You can
You
do
wanna do
it.
my producer?
You could do it like walk up like you did coming to the office. He won't pay attention.
I'm gonna do one of
You
those
should wear a
things.
gold tooth.
I'm gonna do one that I saw Mike
The
Yancey
way he was
posted
carrying
earlier.
his shoulders and stuff.
He was walking in like it was an MMA fight or something.
Yes.
Oh wait, that's wrestling,
He could be.
right?
Hey, ask John Cena.
Speaking of wrestling, we had a professional wrestler come and speak to our Rotary Club yesterday.
Oh, which
right
one?
here, over here. He's the son of Ricky Morton.
Oh,
No, his name's
Terry?
Ricky Morton. No, the dad's Ricky Morton. Ray
Carey?
and the son is
Carrie.
Carey. Yeah, yeah. He's like 24 years old.
Yeah, I know wrestling pretty
Been
well.
doing it his whole life. Great guy, man. He's super entertaining.
Right.
Yeah, but I didn't even know that was the thing around here. He's from Bristol.
Yeah, his dad was he's pretty popular around here.
I looked him up, and he's sure enough, yeah.
Yeah, he was in like he was the World Tag Team Championship for a
Yeah,
while. Rock and Roll Express, baby.
yeah. Yeah, so.
Okay, we're done.
Speaking of wrestling, have you all heard about the Redneck Brawl in Freedom Hall on August 16th?
Have you seen the guy from Alabama that just posted today?
I'm pretty sure one of them posted right by my house. I was like, that's down the street.
Those clips are the most entertaining.
He says, screw, screw.
At the end of it, he says, "If you want to ride this bus, you got to be 200 plus or something."
Bada bam! Get you some. I just can't get enough of that stuff. Anyway.
This is gonna be a good video for you.
Yeah, I can cut that maybe. I don't know. Guidelines. This is another Cali question. Guidelines for contingencies. How much closing costs can be covered with what? Is that two different questions? Guidelines with guidelines for contingencies. Do you know where your train of thought was when that popped up?
It was an agent question that I had on
Guidelines for contingencies.
In general, what guidelines are for your contingencies, yeah, like what you would like to see in a oh yeah, on the buyer's rep, if you're because we put our compensation in the PSA, does your company require that we amend it if we don't do 3%? Because I've had several of them, they're like, you have to amend that buyer's rep. I'm like, I'm telling you though, they don't owe me the 5%, the 0.5%.
Well, the only reason is maybe because it shows up on the seller CD, maybe, and it doesn't match, or no, what do you think?
I think they were just being annoying.
That's never come up.
Yeah, I've never seen that.
I'm like, I can just send you an email. My client, so-and-so, does not owe me the extra 0.5 because the compensation is 2.5 on this transaction. So they're good. They don't owe me.
That's,
They're like, you have to amend it and send it now. I'm like,
That same type of question. What about like stuff like personal items that might
oh
be
yeah,
added, like,
yeah. You wanna bill a
for
sale for
instance,
that?
like a trampoline I had.
So could personal items listed in the contract
Yeah.
influence, like, or could an underwriter say,
We need this taken off.
we need to take it off? That could happen. I haven't encountered that in a long time.
I think I did have that happen. It was one of my
Appraisal
oldest
was
deals.
different
We had a
and, like, maybe
trampoline.
they were
and
taking
everything.
it out.
I had one that had a camper on the property, you want to include into it, that's considered personal, that's what I was told, I mean, I have,
Yeah.
it's personal property, doesn't count because the bank's not gonna want a loan.
The camper is not,
Include that into
the camper's not affixed to the real property. It's just it's on wheels or something.
Yeah.
Yeah.
Anything that's personal, like, oh, well, they're gonna pay for the couch and this chair and this dining room table outside of the property, but some people will try to put it in there. I'm like, but you don't want to see that, so it's a bill of sale separate from the seller or the buyer.
Yeah, we usually recommend maybe an amendment that you don't send to us. I mean, a lot of times we get amendments that we don't put in the file.
Okay.
That's what I was getting ready to say. Some of this I think is a Will question because Will likes to see certain amendments in our back-end system, but are most of those Will related to commission and stuff? Like what kinds of amendments?
Say it again.
Amendments for
Pertaining to like
personal items or
Like I have a
Yeah,
house,
that has to be separate, yeah, for,
I have a listing that has a purchase and sale agreement on it, and we list it as fully furnished, and they put in the contract fully furnished too. So what is that?
the bank will kick it back to you.
You might say fully furnished with no value given to furnishings or something like that.
Yeah.
Doesn't work with every underwriter either.
That's
Yeah.
true, that's true.
Sometimes, most of the time in Pigeon Forge, because I've dealt with that a million times, we just do a separate, bill of sale.
Yeah.
And then it
That's
says,
what Kelly was saying,
yeah, that's the best way.
Okay.
Yeah.
Cause I think it just depends, I guess it depends on the lender, cause I mean, I've had it done that way where it was never flagged.
Right.
Depends
But I
on
also
the
feel like
loan.
if like, it would make a bigger difference if the price of the appraisal was different and like a drastic, and
Mhm.
the buyer and seller had agreed upon it was furnished or whatever, but part of that money was, for
Mhm.
personal items or included.
Mhm.
If
And
you
then
got one through like that, you did really good, because I've had them kick back
Yeah,
many times just on that language right there.
right,
Hmm.
Even putting zero value,
yeah,
I'll take it out, I don't care.
yeah. Repair, replace, amendments, we tend to recommend, just, cause they'll put in lieu of repairs,
Correct,
we say, just do an amendment stating seller credit to be,
correct.
and cause the underwriter's gonna say, well, what are these repairs? They need to be done before, it just opens up a can there. How much closing costs can be covered with what? How much closing costs can the seller cover?
Yes, they've been having questions on like FHA, conventional, VA, what are the
Yeah.
guidelines for that? I know that you have them and you said,
So your GovE loans are gonna be your most flexible, so VA, FHA, USDA. The FHA, USDA allow 6%, which if you can get 6%, get it, that's great, cause it can cover pretty much everything.
Can you do excess?
Any-
Well, that, like, if there's like, just the closing costs are $5,000, but you've got like an $8,000 credit.
I had a client a little before closing said, "Oh, I'm gonna get the extra back in cash, right?" I'm like, "No, it doesn't work that way. Those have to be used for closing costs."
what needs to be said for that, like, because I think I've come across something,
We just had someone turn the excess that they wouldn't have got from closing costs into a home warranty.
Yeah, or buy more points, buy the rate down. That's always a fun news to deliver to a client.
but
Say,
does
"Hey,
it need to say
your seller's
something
paying
else?
for your lower rate."
Like,
Um,
if they're providing 10,000 in whatever, and you just say 10,000 towards closing costs, but then you've got an excess of 5,000, do you have to say specifically closing costs and expenses or closing costs? and
Closing costs in
prepaids?
prepaid items is generally how
Can
it
that
is.
include buy down rates?
A discount point is
expense.
an expense, yeah.
Okay,
So
fantastic.
Um,
I like that.
now there's a brokerage in town that has interpreted all the changes with the new contract to where they think they can put seller to pay up to say $10,000 towards buyers prepaid items
Yeah.
and closing costs, and then also right above that where it says title expenses to be paid by seller. Okay, so think about that. If you're the seller reading this offer, you probably assume that 10,000 is inclusive of the
100%.
sale, right? I mean, like common sense would say.
Yeah.
So will they get to closing and say, no, the 10,000 is in addition to the title expenses. So they're paying.
But
Tell me
if-
that.
if
I think it's
that's
super
not-
unethical.
I mean, usually this is buyer paid anyways, but you would say see this line because then that explains it.
Right, it would match up, but they feel like
They're
there's-
wording it that way because they
Is that your
think
fault,
they're
your
finding a
fault,
loophole.
sole guarantee?
That's so
No, I'm not saying it
shady.
was, but I think it's super unethical. I think that's
Anytime you
just,
put anything in there other than buyers pay it, I think you should let the agent know that you made a change right there, because I will
Absolutely.
say this, my daughter lives in Wisconsin, and it's normal for the seller to pay those costs. And so
Yeah,
it's
state's
actually
right, yeah.
typed into their contract, seller to pay the cost of the buyer's title check and title
so
insurance.
that's
That's the norm, so
Yeah.
to say, normal closing costs or normal, it may not be
Yeah,
normal.
normal's
to somebody
not a
in
good word to
Wisconsin,
use
so
for
make sure
anything.
you state who, you see that in a lot, we went over it here, and you might explain it, it's good you brought that up, and you confirmed. People get unethical when they do things like that, and they get you in a bad pickle. So make sure you say in there, buyers to pay these expenses, and don't put buyer to pay buyer's closing costs, seller to pay seller's closing costs. Cause that leaves it a little bit open-ended there to.
That's line 141, yeah?
We had, one of my colleagues had one this past week where they left it very open-ended, and he's like, well, we can buy, he's like, do you realize what you've done here? Like, you've exposed yourself to a ton, cause we can buy the rate, we could use all of them, we can go very deep here.
Yeah.
I mean,
It better be specific on, and it doesn't come up very often. You could end up paying some of those as a realtor because you didn't explain it correctly, and
Right.
it could come down to
absolutely.
a big
Absolutely.
argument. And one of our agents in here told me they ended up paying those expenses because the seller said that's not normal for me to pay.
Right. I always like seeing a specific dollar amount. I don't like seeing percentages. That makes it a little
Yeah.
funky too.
You don't like seeing.
I don't like seeing percentages. Even though you can kind of go by a percent as like what is allowed. Like if you're putting less than 10% down on a conventional loan, and it's primary or secondary residence, the seller could pay up to 3%.
Correct.
Right. But I wouldn't say ask for 3%. I would say ask for a dollar amount. That's
I'm big on a dollar amount too.
right.
And just put that not
It's more
up
clear.
to, right?
You
That we
can-
want them to pay that, but
So-
not up to.
Up to just leaves more gray area there. I
Yeah.
say just take that.
I usually just put, this is the amount.
Yep.
You've already talked
Yep.
to your lender, we're in this roundabout space, and then if we have to negotiate or it doesn't end up being that, we
That
can
up
always
to
amend
could be
it.
like, well, I only wanted to pay $1. That's up to.
right.
But I have
Correct.
seen that here in our back-end system, adult loop and then amendments where it says up to.
Well, did you say not to put seller pay and closing costs and buyer pay on closing costs?
Never put that in the contract. It's too open-ended. It's already written in a contract who the buyer, what the buyer pays and what the seller, that's type print. If you write something like that in there, you open it up a little bit to, maybe an argument.
Yeah.
So, no, never put that in there. It's in almost every contract in Johnson City.
Mm-hmm.
I don't know who started it or why, but it's like, it's bred into this place. You go to Knoxville.
Buyers pay buyers, sellers pay sellers.
Yeah, you go to Knoxville, you don't
Every
ever see
time.
that. You hardly ever see anything like that.
I think, it's just kind of part of the culture, I guess.
Yeah, it's some kind of it's
Yeah.
actually completely wrong, you know.
It's redundant, is what you're saying.
Yeah,
You
it's,
know, if you look
No,
around the
it's wrong.
It's wrong.
yeah. It's not redundant, it's incorrect.
Right. Yeah. We often see too where people are trying to get so much to where it eats into the buyer's down payment. So that's another thing. A seller can't cover that 3% down or that 5% down amounts, or FHA 3.5% down. So that's sometimes where we say,
That's where
well,
we raise the
you can't, right, well, yeah. It's just like, we have to tell them, well, we can't use all your seller credit because they can't contribute towards your down payment, and that's always a tough pill to
It's an
swallow.
interesting thing, I put that in a contract, and, ended up, it was the owner finance and had to go to court because the seller ended up selling the property out from under the buyer after he'd done it. So anyway, the judge saw that we had put in there about the, raising the sales price.
Mhm.
And he told him what we did, and the judge said, well, it may be a problem, I don't know, he said, but we've done it for 25 years, so it's just the way business is done, so
Right.
that
Part of the
was
normal.
interesting, but yeah, he said it's part of the normal everyday.
Course of business, yeah.
So if it's illegal, everybody's doing it.
Right, right. Yeah, there's the letter of the law and the practical. Yeah. If paid less than buyer's rep, we talked about that, do we have to do an amendment? No, we talked about it. Don't send repair amendments to the lender. Right. We're gonna say, just make it a regular amendment and don't mention repairs.
Correct. And if there is no change, you don't have to have one to send to you. Like if seller was to fix everything and there is no price difference in lieu of that, then you don't need that.
Right. Lender does not want to see inspection, that's true.
Yeah, I've
That's-
had then that has to be a conversation with the
I
buyer.
had it before I came here. They, you know, I tell the buyer, here's what we need to have generally, and that's an appraisal. And anything beyond that, your agent may recommend. Home inspections are always a good idea. We could care less. We don't want to see it. We don't need to see that you've paid for it, unless there's specific language in the contract about
The seller
a
pays.
termite or something, where then we might have to show that it's been paid for.
Okay.
Good enough.
But
Well, are you seeing, like, the question I was thinking is, all these new construction homes going up so quickly, are you seeing appraisals come back on any of the newer construction stuff that are like major issues that need to be like addressed before they can close, or are you just kind of
So-
smooth sailing with new construction?
on
Can
new,
you summarize that?
on new construction homes, are we seeing appraisers note deficiencies in the?
Yeah, things that need, conditions that need to be fixed maybe or something.
Haven't seen a lot of that lately. I mean, if it is, it might be like punch list type stuff.
Yeah, that's true, I didn't think about that.
Um,
Yeah, never mind, that's really not a.
yeah, not really. But I do think it's a good idea to have even a new construction home inspected. I mean, it's crazy.
Oh, yeah.
It's crazy what new houses, what issues come with new houses. It's like, really? It's brand new.
I saw one where the window like came apart from the frame and the sill and was just like this far gapped from it. I was
Oh,
like,
wow.
you gotta be kidding me, bro. It was like a $500,000 or $600,000 house.
Goodness gracious. We talked about
Which, does
USDA.
that go back on the construction people?
Yeah.
It would
Oh, I'm
go-
sorry.
Would that go back
Yes.
on the construction people?
Yes.
And do they have to fix it pro bono?
Usually the
or what?
builder will
Yeah,
have
the builder's gonna wanna fix, cause it's his house to sell usually.
Mhm.
So he needs to fix it in order to get it sold.
Okay.
And typically builders give what, a year warranty normally, something like that.
So I mean, it was one of those they threw up real quick, and it was on the side of it's right behind Science Hill, where they built that one that's sitting on like the hill, like right there off of I can't think of the name. Brown's Mill. Whatever. Anyway, Knob Creek.
Not great.
Driving up through there, and it was like
Yeah.
sitting off the end right there. It was a pretty home. It was just where it was sitting on the hill. I guess the ground, the foundation kind of settled,
Okay.
and the window separated.
Was
There's
this
no
in
flood
the
issues.
was this in those townhomes up there?
Yes. No. This was there might be some townhomes up behind there, but this was in the actual like nice homes, like single family homes.
Okay. In a subdivision.
Yeah.
Okay. Interesting. Wow. Matt had a few questions. He's not here to.
Yeah, he is right there. He just showed up.
He
Hey,
snuck
Matt.
in.
Good to see you.
Hello.
He
I was
snuck
gonna-
in.
I'm
like-
glad that you spoke up. I was about to throw in.
I do have to run, I gotta go.
All right, good to see you, Dustin. Yeah, thanks.
Why Dustin?
So Matt, how to find an appraiser? Take the gloves off and just wail on them.
We've already been talking about wrestling, but you missed it.
You know, I think clear communication is important with what we want to be able to pass on to the buyer and the agent. I've seen instances where you have to communicate most of the time with appraisers through a portal, the AMC, and so you leave your comments there, and then they do what you're asking them to do, and then they resubmit it, and then sometimes it comes back and it's like, well, that's not really what we were asking for. And so I think being able to call, most of the appraisers we work with, I've got their phone up, and I'll just call them and say, hey, help me understand here, what are we looking for? What's gonna satisfy this? And a lot of times you can save a lot of, just back and forth and and then frustration, and then client expense of having to go back out, so, but that's probably not what you're asking. You're probably more asking like value or.
Yeah, I think they've had some folks where if somebody doesn't prefer a certain appraiser, there's a client that has heard a horror story about an appraiser.
Yeah.
We've seen where some people are like, oh, the seller doesn't want them to be here, and then that dude just like does it anyway.
Yeah.
And then it's like the seller, obviously the agents don't have a say in it, but if the seller is like, I don't want this guy on my property,
Yeah.
wife's lender or where we have a
Yeah.
realtor friend or whatever, and they've heard just kind of a commotion about something. Is there, I know other places have different procedures, didn't know what that looked like.
I think we've had success when it's the seller who says that on a counter or on a, you know, it comes from them versus, obviously it can't come from us.
Or the broker.
Right, so, but, you know, I think we have to be very careful not to influence these third-party professionals that we, you know, who are qualified and licensed to do their job. I mean, there's a certain kind of, you know, influence we just can't, you have to be careful with. But just kind of hope for the best a lot of times. Unfortunately, that just kind of, you know, because I've seen that too, where the request is made, that person ends up getting it and doing it anyway.
Yeah.
And it's like, well, what works here? But I think those instances are fewer and further between maybe than they were, hopefully. I don't know. I don't know if that's a good answer.
That's a hard question.
It is a hard question.
Very hard.
We all like to think we have everything under control, right? And a lot of it's outside of our control. But what we can control, let's try to control the best we can. Matt, you'd also asked about buying now versus waiting for rates to drop. I think it's the same kind of message. I think if people are wanting to wait until rates drop to get into the market, you know, they're going to see prices go up and more competition.
Do you think boomers are in pause mode right now because of the economy? See what Trump's gonna do?
I think some are and some aren't.
People with retirements?
I have a couple of those just in my office. They're moving up from Florida, and he's retiring next year, and life goes on. They want to buy. I had a closing this morning where the seller is moving to Georgia to be close to grandkids. You know, life happens, and then I think there's plenty who are kind of, ooh, let's kind of wait and see. You know, I say if life dictates you do something, do it. And, you know, buy. If your living arrangements dictate you need to buy, I would not wait around. I would not let an interest rate wag that dog. I wouldn't. You know, you can always refinance as long as you can afford it, fits in your budget, that kind of thing. We talked a little bit about Powell and Trump and where rates are headed. I mean, something's brewing right now. Something's percolating, and when's it all gonna kind of hit? You know, come down sooner than yesterday. I
In
mean,
the third, forgetting the fourth?
yeah. I mean, so, and I don't remember how long is Powell in office in his position. Is it through
He's
next?
already hunting for a new replacement.
Well, his term expires anyway after what?
I think it's first of the year.
Okay.
Next election.
Yeah. So.
He's an appointee left over from the former Trump
Right.
administration anyway.
Right. So, so I think that's reason for optimism. I mean, I think that if we think that rates are going to help stimulate the housing economy, I think that there's probably a good chance if the status quo continues with the economy and everything, I think we probably will see better rates within the next year, and that's a good thing for all.
And prices go up.
And then prices go up, and then our commission checks go up, right? Cut that.
Are we seeing a higher foreclosure rate right now?
I haven't really seen it. Talking about foreclosure rates, are they higher now? I mean, I think there's more motivation. Has it trickled down to foreclosures actually happening yet? I haven't really heard about it. But I think that the economy, I think you're seeing the effects of people, you know, there's a lot of people struggling. And I think that has to be a natural part of this whole process. I think it's probably healthy for the housing market to have some foreclosures, as bad as that could mean for some people. That's just kind of a normal part of.
Yeah, it's kind of a reset.
Yeah. So I don't know. Do y'all is Don Finley pushed that out. I mean, is there any kind of data out there on foreclosures?
I haven't seen them be any more than, because a lot of people are like, oh, it's gonna be a foreclosure rate bigger than I haven't seen it get anywhere close to that, and I just saw, actually, the other data was showing that mortgage applications have gone up, the highest they've been since, was it 23?
I think your past clients, if you do have a client who is having trouble, I think it's best for them to be proactive in reaching out to their lender and their servicer, because there could be things like forbearance, they could have some kind of deal where they're gonna skip the payment kind of thing or something. If their situation's temporary, not communicating with their lender is not the way to go. It never ends up working out better. So, forbearance.
Communicating with a lender is a tough way to go.
Depends on the lender.
Communication is very difficult
Communication is
with lenders,
everything. Yeah.
especially when you're not making your payments, you know.
Yeah. Have y'all heard much from clients about their loans being sold? Or
If you get like sometimes it's usually like they're either quirky or older, they'll get like real upset if their loan's
Yeah.
sold.
Yeah.
And sometimes they'll only want to go to a place that doesn't have any second market trading.
So Matt made a good point there. Most older clients who, if they've had that happen before,
Yeah, they feel
it's a disruption of their life, even though to someone fairly savvy with setting up auto drafts and things like that, it may not be as big a deal, but if someone who's used to making a payment to someone, all of a sudden that changes, that can be, that can be an anxiety-ridden experience. There's more and more mortgage companies now selling servicing. Movement Mortgage just came out, last month, that they're selling a huge block of their servicing to another company.
Oh, really? I didn't know that.
Free of capital.
I think Cardinals is stopping the service. So what you have, one of the dynamics in our industry is servicing is, when a company buys servicing, they're buying future business. And so you have a lot of companies like PennyMac, Freedom Mortgage, Mr. Cooper, who Rocket acquired. They are they're trying to gobble up all this servicing business because they know that all these clients are gonna be ripe for refinancing in the next year or two. So, if it's a company like ours, who one of our revenue streams is servicing, and you've got a company that's willing to pay a multiple of the book value of that loan, it can make sense to actually sell that servicing and reinvest that money into maybe current pricing, marketing,
Say that way,
technology.
if there's a note that's out there, they 400,000, 6% interest rate, buyers with good credit. Are they just buying that at face value? Like, hey, we're buying the loan, and here's some points on it. Like, how does that?
I think
work?
servicers generally get around a quarter of a point in servicing
So
revenue.
it's not like a huge amount. They just get like a good little. They're really just making the money either on when they refinance or they're eating the majority of the interest.
They're buying that they're buying
Yeah.
the ability to market incessantly to that customer over the
Yes.
next.
Well, yeah. When I refinance or pulled out a HELOC, my credit ding, they were like,
Everyone's calling you, hey.
yeah, it was like, hey, we're with Truist Bank here. Like, what can we do to serve?
So our loans that we service, my marketing department will send me an email every time someone has their credit pulled for a mortgage, and that could be a HELOC, it could be or a payoff. So then and so that gives me an opportunity to reach out to them and say, hey, what's going on? Yeah, because we do HELOCs, we do refis, that's a big part of our business, and so.
Yeah, and it was even sold, so I was like, I don't even know you Truist, but like it was sold to them, and they're like, hey, how can we help you be a great customer again?
Right. So there's the House just passed last month, maybe earlier this month, a bill to curtail trigger leads. Y'all heard of those trigger leads? So when you have a credit run, then everyone and their brother, all of a sudden, I've had pre-approved clients on the phone, I'm pre-approving. I've run their credit. While we're on the phone, they're getting blown up by some online lender. And I tell them, be careful, because they're gonna sell you, on a very low rate probably, that's gonna come with a lot of.
14 cents.
Yeah, yeah. But that's a true lead, and so,
Yeah.
the point,
I think I saw that.
the theory is, listen, my client didn't ask you to call them, they applied with me, so why are you, that's an invasion of privacy, you know, so that's what that bill's all, so the Senate now has it, so.
Okay.
I think my time's up, thank y'all.
Thank you, guys.